As you can see, after this sustained uptrend, you can see from here, price rallied up and a resistance was formed here. And after that, you see a retracement and price came to form another top here. So this is the second top. So we call this the second top and this the first top. So that's why we call it double top. After this first resistance was tested, it held because price was unable to break through it and price pulled back. So this is a reversal pattern, and as you can see, there is a breakout right here from the neckline. If you draw from here to here, you can see there is a breakout. See, this is a breakout. So the question is, how do we trade double top? For us to trade this, your entry should be somewhere around here. Then your target level should be the same length from this top to this neckline that was broken. So you draw something like a straight line, or if you have a way of measuring it, good. But you draw something like this. This should be where your target should be. So you have this way, your target will be right here. So here is your entry and here is your target. So you place your stop loss in a reasonable place. So let's say we enter here and our target is here, and we wait for the market to play out. So with this, you see, so from this top to where it was broken, you measure equal distance from there, then you measure from the neckline also to the bottom. That is where your take profit ought to be. To place your stop loss, you have to factor in a bit of whatever you are seeing at that time. So we have this here. You can see after this bearish move, there was an indecision here. A ranging market occurred within this period. After that, there was a breakout. So price came down to form this support. After that, it rallied up and it came down again. Price retested this support again. So as you can see, price came down to form this double bottom. This first support, we have this is the second support. The second support called the bottom. Then we have this first support here. So the first support, the second support, which makes it the double bottom. Then we have the neckline here. We have the neckline here. So at this neckline, that is where we are expecting a breakout. If price breaks over this neckline, then we start looking for a buying opportunity. So as you can see, price broke through it. You can see this bullish candle that broke the neckline. So our entry is supposed to be somewhere here. So our target level we have to draw to get our entry, our target level rather, we measure from this to this level. Then we take it up to determine where our target is going to be. So if we place our stop loss right beneath this resistance and our target is here and our entry is here, if you look at it, this doesn't make sense. And we are in this forex trading to make money. So if you are risking more than how much you have to make, then it's not a wise decision. You can see from here to here, the risk is higher than from here to here. So if there is a strong breakout, yes, it's good to give the market room. Your stop loss should be around somewhere here, so that your risk to reward ratio can be better. So if you have something like this and the neckline has been broken then our entry should be around that area. If we can get it right, our entry should be around this zone. Then if we enter, our target should be here. The next candle hits the target and price kept on moving. And see, target was more than hit. See how high it came. So as you can see here, this is British pound, Canadian dollar. After the rally here, a resistance was formed. After that, price retraces down to this level before a rally to form a second resistance. As we say, this is a reversal pattern. So we have our first top and our second top, and our neckline somewhere here. You can see our neckline ought to be here. Then we measure from here to determine our target level. So our target level is here, our entry is here, then our stop loss should be around here. Because if we take our stop loss to be at this level, then our risk from here to here outweighs our reward, which is from here to here, which is not the right decision. So your stop loss should be around somewhere here. If you enter at this point and price retraces all the way to hit your stop loss here, then you are not meant to be in the market in the first place. So our stop loss should be reasonable because we are waiting for price to come this way. So our stop loss should be around somewhere here so that our profit margin can be like twice our risk margin. So now it has not been confirmed that this is a bearish trade, because price might come this way and bounce off this way. So we need to wait for a confirmation before we think of buying. In the next bearish candle close, you can see how healthy it is. It closed right below our neckline. So it's a promising candle. So at this point, we should be thinking of how we are going to enter this trade. Either you enter now at the candle close, or you wait for more candles. But if you hesitate too much, price will just take off, and before you know it, it's here. But it is always good to plan your trade and not take trade with the fear of losing out on a trade. It's better you lose out on a trade than entering a trade and losing your money. So always take your time and plan very well. So after this, what happens? See, the next candle printed a bullish candle. So this might reverse from this place now and head this way. But let's see. See, price actually came down, but it was rejected. So the next one now printed a bearish candle. So we might decide now to enter because it has shown a weakness. After that, you can see another bearish candle opened, and you can see price has taken off. So entering at this point would have been a good entry. Then with our stop loss around this zone, then our target here. So that would have been about 1:2 risk to reward ratio. You can see. So price is almost hitting our take profit. Ooh. So price has printed a bullish candle, and after that, what happens? Another bullish candle was opened, which almost touched our entry. So at this place now, we are losing out of our winnings. Our winnings is almost turning into a losing trade, which is not a good one. So at this place now, price is back to the entry. So if you are in this trade, what are you supposed to do? If you look at this critically, from this point here, you see that price formed a resistance. You can see Let me start from this place. You can see the behavior of price. You can see? So price actually formed a resistance here. So if you are in this kind of trade and price and the trade is going in your favor, immediately you see that price has reversed and this type of resistance is broken, it's better for you to get out of this trade so that your winning trade doesn't turn into a losing trade. Please don't forget to give this video a thumbs up. If you don't already have, please subscribe to this channel and turn on notification. Thanks for watching. See you in the next video.